Welcome back, everybody, to another episode of the Finance X Media podcast. Today, we are going to dive into the ever-changing world of crypto and taxes. I don't know about you guys, but it seems like those rules change every other day. Do you guys have the same issues?
Yeah. It's like somebody's trying to take control of it.
Sounds.
Like, I don't like all these free little ants running around.
Oh, I'm with you. The reason why crypto is so wild is because it's being mentioned by people at such a high level and decision makers. World Economic Forum, it's the G20 summits, the ISO 2020, it's kind of the new world order that some people have been talking about, Ray Dalio. So it's an important piece. I have a lot of clients that they want to stay away from it, but what we're here to do is at least provide light and shine some education on crypto and how that can intertwine with taxes if you're involved.
The powerful people are not trying to control it, though. They want us to all be free and safe, right?
We'll go with that one. Stick around to the end of the podcast because we're going to drop a gem for you guys, and we're going to let you know a hassle-free way that you can consolidate all of your crypto this tax season to make it easy for us and easy for you, and make sure you pay the least amount of taxes as possible. One of the first parts of crypto, is it taxable? Is it not?
Not taxable. You don't have to pay any taxes.
If you don't say anything, then it's not taxable. It doesn't necessarily work like that, but to answer that question, buying crypto in and of itself is not a taxable event. What is a taxable event is basically everything else. You transfer that Bitcoin to Ethereum, you sell that Bitcoin. Pretty much anything outside of buying from the IRS standard, which always is changing, is a taxable event outside of buying. There's a lot of legalities to it, and there's a lot of instances where it becomes illegal. So I think that's where the touching point is. What is legal, what is not legal. Do you want to touch on some of the illegal aspects of it?
There's definitely a lot of use on illegal activity in crypto. What I was going to say is I've seen a lot of wallets using this KYC, Know Your Customer, and there's a lot that don't. Like Coinbase and some of the big ones, Robinhood do, but the other ones that don't, technically there's no paperwork that goes along with it, right? So in that, crypto, I think why criminal elements like crypto is that it's essentially not traceable. And so similar to bargaining where people used to use gold or diamonds or art, they used to use fine art back in the old days. Now they're using cryptocurrency to exchange large amounts of money back and forth.
Instead of going through the airport with big baggage of luggage, now you just have a little USB.
Yep.
Yeah, a little cold.
Yeah, and if you think about it, I sold some land a while ago and I got cash for it, and you look at how much cash weighs. I'm not talking gold or silver, just money.
Just paper.
So if you're a drug lord, let's say you're Jaron the drug lord, and you have $600 million of cash to transport, that's a tough thing to do.
Yeah, and that's a Brinks truck.
Yep, and if you go across the border with more than $10,000, I believe it is, in the airport or border, they flag you down. So
it's like in Breaking Bad when they're sleeping on the money.
Yep, or a check. Like if you have cashier's checks and that. So here's the issue. You're trying to get money across the border in amounts of $10,000 or more. I'm sorry, $700 million, it's going to take you a lot of trips at $10,000 pop. The scary part about it is criminal elements working against you on crypto. We had a client that lost $200,000, transferred money into a staking scheme, and Jaron and Jared tracked it down. I think they said it was called layering, where they transferred it to different wallets.
Yeah, so what they'll do is they'll take that initial chunk of your money, and then they'll basically keep part of it in that account and move the rest of it to another account. And we'll keep part of that amount in the new account, move the rest. So over time, it gets spread out between all those accounts, and that's very common in those types of schemes called layering.
Gotcha.
Crazy.
So if you went to Vegas to buy, let's say, an exotic dancer.
Okay.
Are you going to use cryptocurrency for that, or are you going to use your debit card?
I suppose people are going to opt towards the option where they can't be tracked, right? Because That's something where people would feel ashamed.
Yeah, or their wife or girlfriend or boyfriend finds out. Yeah, we don't discriminate. That is what I thought. I did bring in, I said something about strategically allocating assets prior to a divorce. Not that we're, this is for entertainment purposes only.
But we can also help you plan.
Yeah, seek your own tax professional.
Yes.
But this is a cold wallet, so the theory is if you had your cryptocurrency transferred onto this, is essentially untraceable, and you could put $700 million or more worth of crypto on here, no problem.
And that's why it's being discussed on those really big platforms, is because there really is no way they'd know that it's on cold storage at the end of the day.
You would have to find it from the wallet where it was transferred, but you'd use a scheme similar to layering for yourself, transferring it from Coinbase to an Atomic wallet to Kraken, and you would slowly distribute it over. Not that we're suggesting.
Yeah, we do not condone that behavior at all.
Condone this, but I know I personally have 15 or 20 crypto wallets that I spread stuff between when I do crypto mining.
Because that's even mining's a taxable event as well.
Taxable event, yep.
And so, at the end of the year, when you do have, let's say you trade crypto, a lot of people do that, particularly because those markets are so volatile that it's more fun to trade crypto than the stock market, because the stock market's a little slower. And so we found a lot of people wanting to trade crypto for that reason. So at the end of the year, how do you find out how much tax you need to pay? So it works very similar to just like a brokerage account or a stock. So you need to know your cost basis, and then you need to know the fair market value at the time that you either sold or traded it. And the difference in that is your capital gain. So the capital gains rate is different than your ordinary income tax rate. And depending on your situation, it might make more sense to look in options like staking, because that's going to be interest income.
I like steak.
Steak is delicious. And so it can be really important to make sure that you're strategically basically taking those gains. Or if you took a loss, you can do some tax loss harvesting and maybe counteract some of the taxes you would be paying.
The wells seem to lure people in so that they take the losses.
Yes.
Yeah.
Yeah.
So
they did a lot of those, pardon my language, but the shit coins, where they would create a coin, they'd pump it up on social media, and then they just dump it.
An interesting situation like BlackRock, they get into Bitcoin, and then all of a sudden it goes down a little bit, and then people, oh, this is a scam.
It's horrible.
I sell it.
Cryptocurrency's fake. Yeah.
So
They swoop in and buy it at the bottom once everyone's selling.
It seems like some of that is very reoccurring. Not trading advice, but if you are into crypto, especially Bitcoin, zoom out is always my advice for people. It's a savings account.
If you liked it at 20.
Yes. People get into it as an investment.
Yep.
I really don't look at Bitcoin as an investment. I look at it as a savings account. You can always get a loan against your Bitcoin asset as well. So I've never sold any of my Bitcoin. I could probably never see a situation that I would need to sell any of the Bitcoin.
Yeah.
If anything, like I mentioned, take a loan out against your portfolio, just like you would any other, brokerage account.
And as expensive as things are getting, if you do ever have to buy some illegal drugs, at least you'll be able to afford it with the crypto, with the Bitcoin. Yeah, because if you have cash, there's no way you can have enough.
Exactly. And so at the end of the year, the best way to kind of consolidate all of your crypto is to use something like Coin Tracker or Coinly. So what these do is they take all of your crypto transactions from all of your various wallets and consolidates it in one location. This makes it not only easier on you, but also on your accountant, so that you can get those taxes paid for, keep the IRS off your back.
Yep.
I don't want the IRS on my back, or Jack. I would not
one
help
person we
Jack
on your back.
off of my back.
Right.
Coin Tracker is, not a coin tracker advocate. We're not sponsored, but it really is a great platform.
Unless they want to sponsor us.
Unless you want to
You can cut
sponsor
the check.
us.
Yeah, we're fine
Whenever
with
you'd
that.
like.
We're in the market.
For sponsor for anything.
These green screens aren't cheap. So, So I do recommend, get one of these softwares. Not only is it going to be easy for you, especially if you're trying to prepare your own taxes. I couldn't imagine trying to do your own taxes with crypto in TurboTax or taking it to an H&R Block.
I
just don't
think
that
people
that's
just leave it off probably most of the time.
most would just leave it
There's
off.
going to be a lot of letters coming here in the next couple of years.
Yep.
And the problem is that, Fidelity and Robinhood are starting to actually put those on 1099-Bs.
Yep.
I don't know if they have to,
So
but
does
they're
Coinbase.
choosing to do that. And that means the IRS
They
is
know
gonna get
about
that
it.
info.
They just haven't caught up. Yep.
So make sure you use those services and pay your taxes on your cryptos, be responsible, and stay tuned for our next video, and make sure to like, comment, and subscribe. Finance 6 Media.